Perfect. Awesome. Well, welcome and thank you for coming this afternoon and spending a little bit of time with us. We're going to go over some businesses, how businesses obtain credit, how to get it, how to use it, and what businesses we kind of look at to make a loan decision for a business loan. So my name is Becky Spicer, and I am a retail business banker with First Source Bank, and I cover Southwest Michigan, St. Joe, and Niles region as well. We are headquartered out of South Bend, Indiana. We have locations in Southwest Michigan all the way up to Kalamazoo, Berrien, and Cass County, and as well as Northern Indiana and one in Sarasota, Florida. So we're going to get started here. Hang on one second. There we go. So today we're going to kind of learn a little bit, how do you build credit? How do you maintain credit? How does that work for a small business? What do we look for when you come to a banker and you're asking for a loan? What are they looking for? What's going to build a stronger loan application for yourself, whether you're starting out as a business owner or if you've been in business for several years? What is the connection between personal and business credit? How does that personal credit score and report play into that decision? And then what can you expect to kind of bring to the table for a loan application? And what do you need to be prepared for when you go to speak to a banker? So a lot of times people think of credit as something that's kind of like secretive, or we don't know what it is. But what you want to think of as credit is you want to know what's on that personal credit score. You want to know what's on that business score. You want to make sure that all that stuff is accurately reported, as well as you're getting credit for what you're doing. If you're making those payments on time and you're paying down your debt, those are things that you want to get credit for. And so that's what the credit report is going to do. It's going to tell us, are you making payments on time? How long have you done that for? What does that look like? Do you pay it on time, and then does it go delinquent for a while and then pay it on time? What does your consistent payment history look like? So all those things are going to come into play when you're looking at both business credit and personal credit. They're also going to look at kind of, are you maxed out on your lines? Do you have all your credit cards maxed out? You're making that minimum payment. You're not paying it down. So you don't want to max everything out. You want to have a nice debt to income ratio on your credit obligation. So that's going to help boost credit scores as well. So if you're coming, let's just say you're coming to a banker and either you're starting a business or you've been in business for several years and you're looking for some financial funds to do something. We always say the five credits or 5 C's of credits are kind of what they're going to look for. So when you're bringing your application, kind of think of these through these 5 C's, and you can actually determine, hey, do I have a strong presentation to my banker? One is the capacity. So is this your personal ability and business's ability to repay the loan currently and in the future? So this takes into consideration, do you have time? Do you have the time to do it? Are you working already 4 jobs and don't have the time to do that? Do you have the knowledge to do that? The understanding to do that? I always say, like, sometimes if I wanted to open a business, I wouldn't go open a restaurant. And the main reason is because I've never worked in a restaurant. I don't have any restaurant experience. And that doesn't mean it's, not going to happen, but it's going to be a challenge. It's going to be something that you're going to have to overcome. And maybe that's getting a manager in there to run it day to day. That definitely could be something that you could do. So there's kind of speed bumps that you want to overcome before you set yourself up to fail. The second one is capital. And those are, do you have the funds? Do you have the funds that you personally invest into your business, including profits that's been retained in the business? So say you're opening a gym and you've purchased that equipment. You're purchasing some equipment, you got some skin in the game. Those funds that you've contributed to are kind of that skin in the game, the capital you put in. So on a traditional side of lending, on the commercial side, usually they look for 80% loan to value, meaning about 20% of your project is going to come from your pocket. And that could be, as easy as purchasing equipment, funds that you have in a savings account. Or maybe that means, like, I have a real estate that I want to buy, so I want to have my down payment, something like that. So that's that capital, as well as collateral, which is the third one. So collateral just means it's very similar to, like, if you did a personal auto loan. We're taking that car. If you were to default on the loan and the loan does charge off, the bank is going to go ahead and be able to have recourse on that. They're going to be able to take that car back. You're going to be able to sell it for recourse on the loan. So a lot of times you look at collateral, it could be as simple as a vehicle on the business side, a piece of equipment. It also could be real estate if you're looking to purchase a building, if you're at that point that you want to put down some roots. Sometimes we can look at an all asset filing, and that kind of does take play in like service industries. And so what we're looking at a lot of times is service industries, you don't really have a lot of collateral sometimes. And so your accounts receivable, so you do your service, you bill your client, those funds coming in is something that we can look at using as collateral in an all asset filing, as well as that would say everything that the company owns would really go to the bank to pay off the loan if the event that the loan was defaulted and charged off. The fourth one is a little bit more tricky. So it's our character, and that's personal and professional. And I always say, if you're going to come to your banker, you want to present yourself seriously and professionally. If you take yourself serious, then it's more apt that your banker is going to take you very seriously. So you want to look like professional, but you also want to act professional, as well as if you are gathering documents or you're having conversations, you want to make sure you're on time. You want to make sure you're gathering fully completed documents in a timely manner. If your banker is asking for that, that's all going to kind of come in play. Record keeping is also a good one to kind of throw in there. Are they keeping records? Do they know what is happening at their own business that they can communicate to your banker? And the last one is conditions. So if you're doing different types of loans, you have like term loans. That's you're going to term it out. You're going to have the same payment each month. It's going to pay off in 5 years. You have revolving lines where you're taking it out, maybe paying for product up front, you're selling it, and then you're paying down your line. So there's that type of loan as well. There's a fixed rate loan. So that's something to kind of keep in mind, where the rate stays the same all the way through the term of the loan. And sometimes that revolving line is a revolving line. So based off of prime plus a percent. So it's all things that it has to make sense for the deal that you're working. So does it make sense, one for a payment, one for is it a revolver, a term loan, and does the rate make sense for what they're asking? So it's kind of things that we kind of keep in mind. And as we're reviewing a loan deal, like I said, sometimes it just makes sense to know what we're looking for. And then that way you can kind of prepare for that as well. So taking those 5 C's of credit, we do have just a little case study, just something that we can like food for thought here. So I'm just going to go ahead and read this out loud. Giovanna is a 46-year-old entrepreneur who wants to expand her small sewing business, Sew Right. She started the business as a hobby from her home and began by selling to her friends and family. 2 years ago, her daughter made a website for the business and sales skyrocketed. Giovanna was able to start paying off her personal loans from the income. Giovanna has 3 credit cards, 1 business and 2 personal. She pays for her credit cards and her personal loans on time. She always pays more than the minimum balance, but she has never paid off any debt in full. She has owned a car that she's had for 8 years, and she rents an apartment. Giovanna hasn't had any other employment since having her children 15 years ago. So very real situation here. Somebody that maybe has started a business out of their home, they're willing, to grow it, and they are looking for maybe some funds to help them do that. So if we're looking at the 5 C's to compare to that case study, there's a couple different things in there. One of the things we noticed that they said that she rents an apartment. So therefore, it's telling me she doesn't own any personal collateral. So that's something that maybe we can't consider. But she is having sales that are skyrocketing, right? So we can maybe look at doing that all asset filing where we're having the invoices. Maybe she has some sewing machines, those sort of things that we can look at. It's also telling me her personal credit's probably, doing well. She's paying things on time. She's paying down debt. But also that's a good character trait, right? She's putting that extra money towards her expenses, towards paying debt down, and she's being responsible of that too. So it kind of comes full circle for the 5 C's and just kind of that case study. So other considerations is background or general questions. And I think sometimes we think, oh my gosh, this banker is asking me 100 questions and it's a bad sign. But I always say questions are not a bad thing. So what we really want to know is hey, what's the overall big picture? Where did you come from? What are you doing now? Where do you want to go? And so we can help you succeed. We definitely don't want to set anybody up for failure. And sometimes you say no, and that's okay. I think that no doesn't mean no all the time. At First Source, we like to say straight talk and sound advice. And sometimes that is kind of hard to hear sometimes, but we want to get people in a place where they're going to succeed. So they're going to ask questions, maybe spark some little thoughts that maybe you haven't thought of before, or maybe like, oh, well, maybe we should do it maybe a little bit differently. So questions aren't always a bad thing. So kind of keep that in mind. Kind of what we mentioned before, if I don't know restaurant, right? Maybe I need somebody that manages, or I have employees that are longtime restaurant employees and they've worked in the industry, and I'm going to do the books because I know finance very well, right? So it's kind of having that partner. Who's your team? Who's your tribe? And what does that look like for a successful business? Business operation questions, as well as financial and personal questions. And some of those things are hard to talk to. And I think it's very important that you find a banker that you trust, that you can be honest with. We know things happen. And some of those personal questions are a little bit, sometimes feels invasive. People go through divorces, they get sick, and it affects their credit. And we see that, and we are real people. And so I always say, be honest with your banker, because, we're real people and we understand that. But it's how you overcome those things, and what you're doing for the future. So I always say, build your tribe. If you're starting a business, you want to look for your banker. You want to have somebody that you can talk to, somebody that you can pick up the phone and talk to, somebody that you trust and you're going to be honest with, as well as like your CPA, your attorney, those types of people that you have in your corner. I always say your tribe, more so. So business scores and personal scores are pretty similar, but they do have a little bit of differences. They do pull in a little bit of information from different places, but they also have a rating. So the personal score is on a different rating than the business score, but it's very similar that the same things are going to build it. And your personal score is very important. So if you're starting a business and you don't have any business credit built up in your business, which is like very normal when you're starting a business, what they're going to do is they're going to rely very heavily on that personal credit. So they're going to say, what does this personal credit look like? If somebody's personal credit, if they have collections and they have their mortgage is 90 days past due, and maybe it's not the time to start the business. So it's just like some of those things that you have to keep in mind, that your personal score is going to drive a lot of that stuff. They're also a lot of times on the business side ask for a personal guarantee from the business owners. And what that means is basically saying, I personally will pay this loan back if something were to happen with the business and it no longer can pay that, whether that means to shut the doors, or maybe it means like, the pandemic was a huge example of, unprecedented times, and businesses got into a pickle, and so some of them didn't pay out of pocket, and some of them were able to succeed. So I think having that personal guarantee on there, it's stronger when you have a good personal credit score. So if you don't know what your personal credit score is, or you don't know how to find that, talk to your banker, sit down with a banker, understand what's on that personal credit report, especially if you're going to go into that business field, because they will rely heavy on that, and especially if it's a startup business and there isn't any other type of credit built up already. So there's a couple different things that you can get on a business report that's not on the personal report. So obviously it has the credit history. Sometimes it will list assets. It'll also have potential risk for failure, and that's kind of based off of industry standards. What is that industry doing at that time? And then your commercial credit score. Sometimes you can also get the businesses and organization information that's registered with the business state of Michigan, or whatever state you're registered in. So it has a little bit more information that you can access when we pull that as well. So again, we kind of talked about how to build that credit. So it's the same on the personal side as it is on the business side. You want to establish some type of business credit in the business name. So small credit card, maybe that is something, or maybe you have that startup loan and you're looking for that in the business name. Once you put something in the business name and you start making those payments, you're making them on time, it's going to start building up your credit. However, if you have established this and it goes the other way, where you're not making your payments and you're not paying it down, it can affect it just adversely, just like it does on the personal side. So maintaining it, you just want to keep adding it. The longer you have on your reports, personal and business, the better it is. So it's establishing a history, right? So we can see this person can pay 2 years, 2 years, 3 years, 4 years, and that kind of plays into that character as well. That one of the C's of credit. So this is kind of a list that they put together, that we've actually put together, to kind of tells you what you might look for when you're doing a business application with a banker. And again, this is kind of generic, so you can definitely talk to your banker and see specifically what they're doing or what they need. But a lot of times they'll have a business credit application that you'll fill out, which is pretty standard. They'll pull your credit report on the personal side. One of the things they'll look for is probably a proof of income, personal tax returns, and business tax returns if you've been in business. So that's something that if you've been in business for several years, we want to see, how you're doing. Are you succeeding? Is that why you need more capital? Very much like the case study shows that we're kind of growing and we're at that point. Or are you at the point where we're looking to maybe retire and pass that business down on to the next generation? Any financial statements, profit and loss. So if we are looking, let's just say today, we're in the middle of April. So we want to see something that shows 2021. We'll take 2020 taxes, but we also want to see what it's doing now. We're already almost 5 months into the year. So that's very important when you're keeping your records. You want to know where you are at that time. So keeping a profit and loss, how much are we spending versus how much are we bringing in? So that way you know where your business is at all times, and you can provide that to your banker. Keeping an updated records is so important when providing information to your business. It shows organization, and it shows your business exactly, or it shows your banker where your business is and how it's doing. So it's very important. Any information you have on your collateral. So if you're using a piece of equipment, what equipment is that? What, serial numbers, years, makes, models of cars. If you're looking to buy a real estate building, where is it? Maybe the listing that's listed online or with a realtor, so that we understand what kind of collateral we're going to use on there. If you're purchasing something, a vehicle from a dealership, you're looking for, your purchase agreement. Or if you're buying a business from somebody that's already been established and they're getting ready to retire, you're going to take over and you have a purchase contract. What that's going to do, it's going to tell your banker, what are you getting in that deal and what are you not getting in that deal? And sometimes people think, yeah, I'm getting all this stuff, but it's not listed in there. So, just making sure that everything is on paper the way you want it and the way your banker wants it. So any business lease or loan agreements, if you're renting properties, if you have a property holding company that you're paying for your rents, anything like that. We also say business license. We want to make sure we're doing business right. Any type of legal issues can be a concern if they shut down the business for any legal reasons, right? You might not have the revenue to pay the bank back. So that's what kind of the connect back. So we want to make sure any business license that are needed are provided. Any disclosures on you or your partners. So a lot of times I've seen resumes in their business plan. This is who Joe Smith is. He'll be running my front end of my restaurant. Here's his resume. He's been in the industry for 50 years. This is why, I trust in him to, build the business for success. And then a business plan. And I think this is an important one because it says a plus but not required. So I think it speaks a little bit differently if you're starting up a business. It's very, very important to have a business plan if you're starting up a business and you're coming to the banker. They're going to ask for your business plan if you're a startup business. And really what your business plan is, it's doing two things. It's giving you a manual to go back to. So you're putting it down on paper. This is what I want to do. And then if you're starting your business and something comes up, we go back to the business plan, we readjust. So it's one for you as a customer and starting your business, but also it's putting everything on paper for your banker. So as your banker, if we have to, present it to a senior lender or a credit committee, somebody that makes the loan decision on behalf of the lender, that you're putting it down on paper and we can see your whole plan, that you've thought through a lot of the things that maybe your opening balance, where you're getting this cash, how are you going to achieve success? So it's doing two things. It's one, it's telling you how to kind of regroup and what you're going to do with the business, but also it's going to put yourself on paper so that people know what you're doing, and you don't have to be there to explain it all the time. So kind of two different things. If you've been in business a little bit longer, maybe a little bit
We have
different.
a question from Facebook Live.
Okay, yeah, go ahead.
What if I'm a sole proprietor and showed a loss on my business because of COVID?
That's a excellent question. And so I actually just had this with another business of mine that we were looking at that. And again, we look at all the tax returns, the history of the business, but again, we understand that 2020 was a different type of year, right? And so sometimes it means, hey, we're just staying in business, and that's okay. But now, how are we adjusting to go either build our business or get back to maybe where we want to be? So I think it's important to not throw it out, because it happens. It's still happening, unfortunately, with the pandemic, and it's still affecting a lot of businesses. But I don't think it's always a bad thing. But I think you have to be cautious on how you use your 2020 numbers. I don't think it's the end all, but I definitely think that we understand that there was a pandemic, and some people are going to take a loss, but still be able to keep remain open. And some people weren't as fortunate. So I think, just being honest with your banker as well, of how that affected you. Different businesses were shut down. I think restaurants, huge restrictions on them all year, still going. So we understand that. And I think that you just have to kind of take it, in stride, and look at what's happening now and where are we going, and how will we change what we're doing to adjust to the pandemic. So that's kind of what we've been doing with the 2020 numbers. Also, if you're a sole proprietor, if you haven't looked at the payroll protection program, they have made several changes to that a lot of sole proprietors are able to get some funding for that. And through the SBA. So if you haven't done that and you are a sole proprietor, please talk to your banker, talk to your CPA. They'll have actually a lot of information on it. The funds right now are going to be open until May 31st, but if they run out before that, then the program will be done. So that's something to kind of keep in mind. I know they've made a lot of changes through sole proprietor requirements, and a lot of people that weren't eligible before now have become eligible. So definitely, if you're a sole prop and you want to talk about that, let me know. Or if you have a banker that you work with or a CPA, definitely reach out to them. Perfect. So the SBA if you don't know what the SBA is, it's a Small Business Administration. It's part of the U.S. government, and it was established to kind of help small businesses.
Really quick, did you mention where we can find help for business plan instructor, from a business plan instructor?
Yes, actually, I think that's coming up here in the next couple of slides. So hang tight, and we'll get to that. And then if we have more questions, I definitely can address it for you. But I think that's coming up here in the next couple of slides here. So one of the SBA things is they've established that to help small businesses with funding. And what it does, it kind of does two things. It helps some of the things on the customer side, but it also is a perk to the bank as well, because it holds a guarantee on there. And what that means is if that business loan goes bad, the government guarantees they give funds to the bank if that loan were to go bad and to pay it off. However, that client is still responsible for it. So it isn't like I failed and now the government's going to pay it off. So it isn't like that, but it definitely takes a little bit of risk off the bank, as well as provides a couple different perks to the client as well. So these are a couple of programs that the SBA has. Some of the banks are called preferred lenders to the SBA. And what that means is that they can make decisions on behalf of the SBA. First Source is a preferred lender, so we can make decisions in-house on those loans that are SBA guaranteed. Some institutions don't have that. And so what they do have to do is gather the information and send that application and decision up to the SBA itself. And it takes a little bit of time. So if you're looking for SBA lending, one of the questions you might want to ask your banker is, do you have the preferred lender through the SBA? Are you able to make those in-house decisions? Because it might affect the timeline. So if the timeline is super important to you, that might be something to kind of keep in mind. One of the other things I kind of want to point out is if you go on the very bottom line that says 10% down payment by the borrower, which you might remember from earlier, I said in traditional, you're looking at 20%. So sometimes if you're building a building and you want to have some cash on hand, maybe you only want to put 10% down, or maybe you only have 10%. So that's something you can look at doing SBA versus traditional. And it will actually have to have less money down. So it's definitely a perk to the client on that end. So here's kind of one of the question that was asked earlier about the business plans. So there's a couple of different organizations in the area that will help with your business plan for absolutely free. One is the Cornerstone Alliance, the Women's Business Center over in Benton Harbor. They will help you put that together, that business plan. They also have a lot of counseling for small business owners, startups, or if you are looking for marketing. They have a lot of workshops, but you definitely can set an appointment with them and they'll actually go through that business plan with you and what that should look like. So that's absolutely free. So that's one, I would say, outreach to reach out to if you're kind of wanting help on the business plan. Another one would be SCORE, and that's SCORE. Located, there's one chapter in South Bend. There's also one in Kalamazoo. And what that is, an organization absolutely free as well to meet with these individuals. And they're actually people that have worked in the industry for many years. A lot of them are retired from the same industries that you're working. They kind of partner you with somebody that's similarly ran a business like yours and can help you with a variety of different topics. So that's also a free outreach. So that would be a possibility to do that. I guess that's South Bend, Kalamazoo area. So there's both great organizations with free advice for clients as well. The Women's Business Center in Cornerstone Alliance also has a micro lending program, and they do loans up to $50,000. They have a little bit different criteria than some of the banks sometimes, and they are funded through the SBA as well. So that's something to kind of keep in mind if you're looking for a small loan and maybe you're starting off and you want a little bit of guidance on that. The Cornerstone Alliance over in Benton Harbor will definitely be a good outreach for you. There's also grants, a lot of grants that you can get. And the great thing about grants is if you spend it appropriately, a lot of times you don't have to pay it back, which is wonderful. So Cornerstone Alliance is one that if you're looking for grants on certain things, they might be one that you can reach out to and say, hey, can you help me find some grants? And they definitely can sit down with you and kind of look for that opportunities as well. So I hope that answers the question on the business plans. And if not, please let me know. But that's definitely a great question because it is challenging to put something together, especially if you haven't done one before. So kind of just wrapping it up here, we did go over those 5 C's of collateral. If you're looking to come to a banker, if you want to speak to somebody, kind of think of those 5 C's, like, what do I have for my capital? What do I have for my collateral? Am I establishing good character? Am I presenting myself well? If you take yourself seriously, odds are, a banker will take you seriously. Definitely look at your personal credit before. Understand that, because that's probably going to be something they're going to rely on, especially if it's a startup business and they don't have a business score to go on. So something very important to understand, not only understand, but make sure that you're building it and you're, paying yourself with reporting well. So if you want to sit down, I'm more than happy to sit down with anybody that's, current business owner or looking to do, to start a business, but definitely find a banker you trust and find somebody that you can work with and be honest with and build that tribe. Any other questions? All right.
There is one other question.
Yeah.
The question is, how do people who file business bankruptcy, how are they able to open a new business and get loans and funding?
So I think bankruptcy is going to be one of those challenges. I always call them speed bumps. I say, we're going to run into some speed bumps, and any bankruptcy, whether it's on personal or business, is going to be hard to overcome. But I think, understanding what's on your credit report and how to overcome them, building back up that credit, building back up, your personal credit to kind of insist on that. I think that would also be something you could take to the Cornerstone Alliance, the Women's Business Center, and say, this is what I'm trying to do. This is what I want to do to start this business. This is what I've done in the past and how that affects it. So I think that might be also a good thing that you might reach out to them as well. But I think understanding what's on there and then setting a plan in action with either your banker or a member of the Cornerstone Alliance, and how do we overcome that and where are we going? So I'm just making sure you're moving forward.
Thank you so much, Becky.
You're welcome.
I will give another few seconds to see if there are any additional questions. And I don't see where we have any. Thank you all. Thank you, First Source Bank, Becky, Isis, and Kim for the wonderful presentation today on how to use business credit. Thank you to our viewers for attending today's webinar. And I hope that you were able to get some valuable information.